Okay, good morning everyone. Welcome back. We are just about to start and kick off 9:30 open. As you can see, we've got our pre-market ranges high and low here, kind of a short range. So obviously this could extend to the ones up here, right? This one or this one, this one or this one. Okay, but we'll use the immediate ranges right now in our 15-minute window. Watch it on the 15. There we go. There's the open and dropping down. Okay, and we got ourselves a sweep. Looks like. Let's see if we get a close back and a change of character. Or do we keep pushing? Psych level hit here, 180. Previous daily high is right below us. So taking out this liquidity pool here and retesting previous daily high, well, that giving us the move back up also works. And then we've got the 50 level sitting right here as well. So we can get a bounce from that. It's got some nice OB sitting here. This one's got the most volume here. We did get a little sweep here. And then we got the nice move up here. So there's a possibility that we don't get back below this structure, this consolidation here. So this previous daily high retest is really going to be important to watch to see if we get. All right, we got divergence off the low, trading into the psych level at 180. We got the closure back above the New-York low, pre-market low, but we've got to get a change of character. So seeing price come back above here and then seeing the retest range, and hopefully we get some sort of structure, but it's kind of let's see here. If we get the retest, what am I doing here? Retest here, stop underneath. It's about a 60-point stop if we get an entry around the change of character. Rolling back up to 300 for a 1-to-1, and then seeing if we can knock out these internal highs here for that continuation if we get it. All right, daily bias is bullish, so we are still trading bullish. We are at all-time highs, and we should focus on trading, bullish setups if we can find reasons to be bullish. Good morning, Kyle. What's up? Nice to see you. All right, good movement here with the sweep. Now we're getting the momentum we're looking for. Obviously, I want to see it create an imbalance. Ideally, what it can do is get the change of character and create the imbalance, and then we trade back into the imbalance with the change of character confluence, right? And then we get that move up like so. So you can see here what this does, this indicator, by the way, is it plots the OBs right in the range, but then it calculates the volume of the OBs in the range and how much buying and selling went on in those areas. And then it gives you percentages, right? So the most of the volume you can see is clustered in this clump right here, 82%, 14%, right? These are smaller ones here. So it takes the range, it calculates the OBs in the range, and then it calculates the buying and selling into it. And you can see it's in real time updated, right? As the data is moving and buying and selling has happened in the area, it moves with price as each candle ticks. And so you can see we get a very strong reaction from here because there's a lot of volume here. And now we just want to see if it confirms, right? So it's not going to be, it's like a magic holy grail indicator that tells you where to buy and sell, right? You still have to wait for confirmations. You still have to wait for things to tell you that it is moving in that direction. And so using our checklist, right? Confirming those things with our checklist and the 5 steps. And again, if you don't have that, the checklist is in the description. Get that downloaded, copy it, print it out, follow along with us when we look for our confirmations. The first step of the checklist is our higher time frame point of interest. That can be an order block, that can be an imbalance, that can be a swing that gets taken out, right? So if we go to the 15-minute, you can see here that we are trading into a 15-minute OB right now. There's a 15-minute imbalance just below us, but we got the trade into the 15-minute higher time frame. The second step is a liquidity sweep, right? So there's our pre-market highs and lows being marked out. There's our liquidity sweep. We want a confirmation of the liquidity sweep by getting a big displacement, right? We sort of got that, not really though. We didn't get an imbalance, right? And then we want to see change of character. So here we didn't get that change of character, right? So that means that we're going to go lower, right? Now we have liquidity pool here, nice set of equal lows, and then we can look for another sweep. And this is still going to be, should still be in that 15-minute order block, right? With the low of it, which is right here. But even if it does go a little bit past, right, that's going into the imbalance. So it's still a higher time frame point of interest there. That makes sense down here. So sweep into a higher time frame point of interest, right? Confirmation of the sweep. We need that change of character for that confirmation. We need that displacement to see that price is actually moving away from that area aggressively. And then after that, we look for retracement, right, that range, and then the final step is to look for divergence if we have it. So you can take it on the retrace back into the change of character. I like to look for one additional step, which is to look for an internal sweep. So like this right here would be classified as an internal sweep if we had gotten the change of character, which we did not. So this is not valid right now. But let's just say this does go and give us change of character here, displaces through, right? And this retracement that's happening right now, I'd be looking for this low to be swept into that OB and then for price to take off. All right, looking good now. Okay, good candle, closes above, gives us our change of character. Hopefully we get an imbalance here. All right, but that is confirmation now of that sweep. And this is now a valid swing low in the range if we do get that retracement, although it's very, very low in the range. The change of character and the imbalance here would be a point of interest for price to react and trade away from. We've got a psych level here of 220. So let's see what happens here in this next 20 seconds. If we close like this and leave this in balance, that would be perfect. All right, fantastic. And potentially another imbalance forming here. So there's that imbalance here. I'm going to be looking for a 220 entry at the very least here. We could also come down and sweep this level out. This would be right at the 200 level, right? So either of those two entries would be good. Stop would be underneath the manipulation and the whole structure here. So looking around a 50-point stop. And then 1-to-1 would be just above the structure. And then we'll see if it goes up from there. So let's see if we get that retrace. Slight tease, almost got there, not quite. All right, now we've got another potential swing into the POI. And this is now going to go higher in terms of a retrace. Okay, solid reaction at the OB and the high here. Well, let's see if we do get that. Now we do have a swing. So there's our retracement. And now our EQ and discount POIs need to be tagged. Trading into the imbalance here. Okay, did we tag it? I think we just did here, right? 219.75. Yeah, we just got into. All right, so now we just want to see it close back above it, or it could run down to this one. But either one of those two should tag and then close back above, and then we can enter. Retag the New York low, almost got there. Let's see if we get a close above here. I don't like that we left an imbalance and inverted this though. So I might have to wait until this gets re-inverted back to the upside. Because that is not good to leave behind. But we did tag the 200 level. All right, we're going to take this entry as soon as this closes right there. Okay, 215 or 216 entry-ish, right? We got about a 50-point stop trailing these lows here. And I want to see this now inverted. So that we can get above this high. Good candle, stay that way. This could be a good close. Just need to close through. All right, closed halfway. We did get divergence though, that's good, right? So our stop should be safe as long as we don't violate the divergence. Now let's see if we can get some follow through here, close in this gap, and then take out these highs. Slow goings here, right around the entry, floating. I don't like that we're not getting a lot of momentum right now. So I really need to see a nice push up, close to the imbalance. This candle can do that. If this candle starts off bullish like this and it ends up like a bearish candle, then that is not a good sign. So we really want to see some momentum pick up here because we've already kind of tagged these levels here. So I really need to see it push through now. I don't want to get too excited because this could end up as a big wick at the end of 15 seconds. So let's see, at least get a closure above the imbalance, right? And the change of character line. If we can get that, that'll be good. 5 seconds is looking, yeah, it's borderline. Okay, right on the border there. Right, a little double divergence, another divergence line here. So hopefully we can keep the momentum. It's not a whole lot of momentum though. So still really need to get a nice closure above the level here. We're still kind of like respecting this range. Okay, that was a good close at the end there. I'm assuming 10 o'clock volume is going to give us something as well, right? A nice run through, but hopefully we get our TP before 10 o'clock because I don't really want to trade through that. All right, TP level is going to be just underneath the psych level here at 270, and I'll be happy with that. 50 level retest. Always scary when it holds right before the high. Oh, that was a bad close. So may be coming out to sweep out some more liquidity here before coming up, but really need to see a recovery spike back up here. I don't really want to see it hold like that. Yeah, and I think 10 o'clock volume is probably having something to do with this. We may see a manipulation at 10, come down and take out more lows, and then we see a spike up. It looks like, you know, you might see that because it looks like we're accelerating to the downside here. But let's see if this this sweep here holds. That was the original, the internal low sweep, right, on the retracement here. So nice equal lows, retracement, close above. I don't like it if it's a bearish close, right? So this has to be a bullish candle. And then I would take that entry if we were waiting for that internal sweep. So let's see if we do get a bullish candle here in 25 seconds. You might get right around our entry. All right, 5, 4, 3, 2, 1. So it is going to be a bullish candle, but a doji candle. So, all right, and we also have divergence, which may immediately get negated right now. Yeah, I don't like that we held there. There's divergence there at the top as well. So, all right, let's see. If we close below here, I'm going to take a half stop out. So anytime we close below, because the 200 level here is going to be the threshold I want to see hold price to the upside. If we get below 200, then I think we're going to take this structure out and probably even go lower. So what is that? That's going to be roughly about a 20-point stop, which is okay. So it looks like we are going to close below, and yeah, so I'm going to take that stop. All right, it's only going to be about 20 points, so not too bad. I'll wait for a better entry, because it looks like we're going to get a full stop out here. I'll wait for another sweep maybe, and let's see what else we can get here? So we got a sweep below here into this imbalance. We got previous daily high. We can retest. So yeah, that would have given me a full stop out there. All right, we did sweep these lows, nice equal lows into here. See if we get another change of character. And another roll back up. Previous daily highs right here as well. We'll see if 10 o'clock volume gives us a nice push in either direction. Some volume accumulating here, some buying. Right at previous daily high, right? There's that turnaround to 150 reaction, rolling back up. So this has to create another range like lower for us to get a better change of character, because right now change of character is going to be up here. So that's going to be a lot of distance to cover back up, and then we have to wait for a big pullback or retracement. So much rather get a smaller one right here, maybe retest this imbalance, right? Come down, take this low out, and then give us a change of character, and then come back up through. Ten o'clock in a minute and a half coming up. Let's take a look at the 4 hour. What does that look like right now? 4 hour looks like a pin bar, and I'm going to mark this high here. Let's get rid of these for now. I believe this is the same high that I marked in the pre-market as well. The same order block that we're looking for price to trade back into. So, you know, could be this cluster, but I had noted that we had London consolidation range and also Asia consolidation range with a gap below us. So I wanted price to come down here and take all those out before moving higher again. There's also another cluster right here underneath, although there's no 15-minute POI down there that's visibly clear, but there's a nice cluster of lows there into that reaction, right? This reaction swept out liquidity, and then we saw the break of structure. So this would be a range that we would use. Okay, nice reaction. Also got the inversion. Now retesting this level here. Let's see if we get a retest. This would be about a 40-point stop. How you doing, Zane? Good to see you. You don't do anything anymore. No, I do Elliott Wave, and oh man, of course. Instant TP if I had taken it there, but again, I don't like taking it on a bearish candle wick, right? I would have waited for the bullish candle to confirm, but you know, in this case, the bullish candle is the move. So let's see if we get a confirmation. This does become now liquidity. We could sweep back into the range if it does give us a move like that, right? But we don't have a full change of character yet, so this would be something we come up, break structure, give us a change of character, retest back down, and then sweep back into this level. We'll keep the inversion here just so you guys can see the reactions at this point. Imbalance was respected here. So see that? Just a short burst, right? And then the change of character confirms the move up. So if we don't get that, then there's a possibility of it doing this just like over here, right? Even though we got the change of character, it still respected the range high, right? This is the range. So we got the break of structure here, right? It broke below our New York pre-market low. This is our range, right? And then it retraces, right? So we have confirmation that this is a sweep and that we're going to get the retracement when we get the change of character. The change of character is just an indication that price is turning around. It's not a guarantee, of course. And, you know, since we got the imbalance here as well, that was also extra confirmation. But you can see that the imbalance gets inverted, right? And that was not a good sign to see. So the reaction here was very choppy, was very slow. We almost got a breakthrough up here, but then right at the last minute, we respected the high and then broke structure again, right? So this is our new structure, high and low. Okay, again, we have a sweep of these levels here, right, into a point of interest, a higher time frame point of interest, which is our 15-minute imbalance. Okay, a sweep, you could say this level here, right, closure back above here with an inversion. right, qualifies as a sweep, but for me, it's the change of character, right? So change of character swing is this one right here. So this has to come all the way back up here and close above that. And then this tells me that we're turning around. We could be potentially turning around because this is only 1 minute structure. So 1 minute structure is not really reliable in the bigger picture, right? It's just a small move. It's a good reaction here at this level. We're holding previous daily high. We had another imbalance here. That we saw was holding, right? And then it came down, it swept those lows and then held again. Of course, trading above here will confirm that because we still are, like I said, respecting bearish structure here. We've got divergence now on that low. I like that they're building in all this liquidity at the top. You can see these green lines being formed, right? Those are all the swings that we can come back for. That's what was happening yesterday when we saw all of those lows being built up prior to New York session. All of these here, right? Same kind of idea. And then finally one big swoop and down. You guys remember the level I was talking about yesterday, right? Taking all these lows out and then trading into this gap right here. 26,700 I believe was the level that I said, right? Because it was right underneath this low. Okay, and look where the market came back to. Came back to 680 actually on the dot. So that's why I stress you guys to pay attention to those psych levels because they do hold a lot of liquidity there, and either you can use them as take profit targets or you can use them as stop levels. Either way, they can be very, very accurate in pinpointing where price is going. Right, this turnaround here happened at a 50 level. There's a 20 level right below it here, so a stop could have been underneath a 20 level with an entry at a 50. All right, we're back above our 200 level now before, right? So this is looking like manipulation to me. Here's the range, right? Anywhere down here in this discount, we can look for a sweep and a move back up if we get the change of character, which we don't have right now. So without the change of character, what this means is that price could still respect the high here, just like we respected the high here and dropped, right? Respect the high here and drop. And that just creates more liquidity above, right? It's building in that selling sentiment. We're respecting highs and then breaking structure. Respecting highs, breaking structure. As we do that, each time we go down, people are trailing their stops lower and lower, right? And still creating more liquidity up here. Notice how all of these highs are being respected, right? Respected, respected. Once we get into a nice discount level, and we get a nice big change of character shift, then all of these highs will be targeted. Yep, of course. Of course. Let's go. All right. So we have this consolidation now holding a lot of volume, you can see, and pushing price higher. And we're just about to get that change of character, looks like. So I'll mark the level just so we can watch if we do get that closure above. Okay, and here's where we can see price is respecting the high. We're going to move down. Now we can see that we are trading above. Let's see if that holds. Another wick. Oh, there we go. So we had to wait for that 10 o'clock, 9 to 10 o'clock crossover manipulation. Takes out these lows here, and now we're getting the confirmation, right, of the closure above this. So we'll look for a retracement back into this range if it's going to retrace that far. But look at the structure now, right? 15-minute candle, big bullish candle. In about 2 minutes, we'll get a closure. This high is now taken out, and now we are now going back up above the New York high pre-market levels. So a lot of this is just timing, right? I mean, yesterday's trade was also timing. We could have caught a monster short if we had waited for the previous daily high to be taken out first, but there was this kind of like internal structure here, right? So we took it around, I think we took it around this level. I forgot it was this level or this level, one of these two levels, right? And it didn't work out, took us out, and then what it did was came back up to previous day's highs instead. Took that out, and you could see after we got that sweep, then it was smooth sailing, right? So take this high here, drag it across. So now you can see pretty closely, right? So we have higher highs, higher highs, higher highs, right? And then boom, we get the sweep above the level here. This almost confirmed. Well, actually, this does confirm, but then we need the retracement, right? And the high taken out, which doesn't happen until right here. So we take out another high, and then we get the change of character. So change of character here. right? And then it retraces back into an imbalance here. We don't get an internal sweep. Trades back into an imbalance. And then it dumps off. Okay, so now, okay, I missed this entry. That's fine. Let's go back, right? What does it do now? It comes down. So this bigger move now gives us a bigger change of character. Okay, and then we get a bigger retracement, right? So now I've got this range. Instead of this small range, now I've got this big range. Okay, and it starts to retrace. When it retraces, we look for what? Internal swings, right, into POIs. We've got an imbalance here. We've got a high here. We've got the actual initial change of character here, the mitigation. Let's see if this is where it hits. I think that's probably where it gets. Nope, almost. But regardless, right, we've got this imbalance here. We've got this high here. All we're looking for is that internal high to be taken out and then traded back below. So right here, we get that trade back below right here, right? My entry would be here on this candle, on this big engulfing candle right here. Okay. On the flip side, right, on a shorts like this, if it tagged the level like this and it closed bullish like this, I would not take it there. I'd wait for this candle, this bearish candle here for the railroad tracks. Same idea as I was saying earlier on the bullish entry. So if I take my entry here, now my stop can go above, you know, this order block, right, just in case it comes back for that OB, about 40 points, and then smooth ride to the downside. And if I had held to, you know, the target that I was looking for, right, 700, right, this is like ideally what would happen here. 700 would be right about here, right? That's 400 points. Okay, and I would of course manage it all the way down. So like, you know, that's almost a 10R trade, but I'd manage it all the way down, right? So we get down to like 2R, right? My stop is at break even until 2R. It gets to 2R, and then I start to trail the highs, right? So I trail here, I trail here, I trail here, I trail here, and then this is where I get stopped out. So ideally, if I was trailing the move all the way down, I'd get stopped out here around 200 points. I would not be upset about that at all. Bigger retracement, move down right here, right? Let's see. Oops. High to low. Right, we get the sweep of the level. We get a, let's see, a change of character. Happens, oh, actually this is the new swing, not this one, sorry. It's this swing, right? This swing comes down, sweeps the low. We get an internal shift here, right? This is the last swing high. I guess you could count this one, but this one doesn't take the low. If there was a divergence here, I'd count that. Okay, but this is the high that gets taken out for the change of character here. Right, then we get the gradual move up, and then the retracement happens here, right? So this is my range now for the retracement. Looking for a discount POI. That never happens, unfortunately. So we'd be looking at taking this low out, trading into this imbalance here, something like that, right? We got to close back above and take it. Never hits that level, so we never get a proper buy setup back up following our model. But maybe we will, right? This whole move now, if we do get a big, you know, move downward today, maybe it comes back for these lows here, right? Nice equal lows setting up into this imbalance, right? Just like we did yesterday. It's almost identical, the structure, right? Lows into like a V-shape imbalance inversion right here. So maybe we get it on the move down. there's our move. We entered here. It didn't happen until a sweep and the confirmation there. Let's see what happens here. Your highs still haven't been taken out. We still have an order block here that we could trade into for that move if it respects it. Big divergence here. Okay, so there's a bounce off the previous daily high, retest of the level, and then the push up. If we look at it on the 15% time frame view, 15-minute time frame view, we have the sweep of the level here, retest of the level, confirmation, and then the bullish candle closing back above to confirm the retest. So we could be looking for, like I said, once this confirms above, right, which we did get that confirmation above, now we can see a retest, or not a retest, a retrace rather, of this range, this high to this low. And now we're looking for continuation to happen once we get down into our discount level. So we have our swing low here, we have swing lows here. If we trade back into here, these would be a little bit more extreme cases. There's a 50 level right here. And then below that, there's this 120 if we want to go a little bit lower until we get the confirmation. But if we don't get a confirmation at these levels here, then you look for a sweep of this level to see this kind of structure move again. All right, let's see. Did we take out those highs? No, we came really close. This was 268 and this was 267.50, so 2 ticks away from taking that high, respecting it again, building in liquidity, right? So again, we're still bullish. So levels down here, confirming here, giving us a move up through those equal highs, through the rest of these highs here would be fantastic if we can. Right, so change of character line confirmed by trading above. We're not trading below that. We've got a divergence here, and so we could see price, just go up from here, but we have to close back above that change of character line for that to happen. Ideally though, like I said, I'd like for price to come down here and sweep something out internally in the discount. So the only one that I can see really is this one right here, right now. That's the closest one that we have. I guess the closest one we have technically is the one that we just formed right here. So that could also be a possibility, but that's in the premium, not in the discount. So I'd rather see price come lower into these levels here. So again, previous daily high, or this one, since we've already retested previous daily high once, I don't think we need to do it again. So just coming back for this would be nice. But sweeping this level and trading into this order block, like let's say the wick, right, 50%, or trading below this level here, that could also count. I don't necessarily need to come all the way back down to sweep this level. And then seeing it, you know, close back above that level as confirmation. Hey Chuck, good to see you, buddy. Thanks for joining the stream. Come on down. Oh, there we go. Some more selling volume coming in. All right, this looks like we're going to go lower. Okay, so there's that level retested there, midpoint, right? Let's see if we come and take this out here. So that candle did close above the order block, not this line. Do not like those big wicks at all. I think this color might be a little too bright. What do you guys think? I think I want to change that to 85 maybe. That's a little better. All right, divergence and a reaction. Let's see if we could closure above right there. See how this 15-minute candle closes. Looks like it's going to close bearish here, right, in about 20 seconds. So I don't really see a whole lot of, strength or weakness otherwise, because we're in a consolidation right now. So it's very difficult to gauge what price wants to do at this point. It could go lower, sweep out some more liquidity in this range here, and then push higher. Seems like that might be the case, but then the next candle here could be a big bullish candle, right? And then we could see, price come up and maybe take out the highs first. So this is kind of like a, one of those I don't really want to get involved ranges until I get something clear on these, at least at the 15-minute. Yeah, I like that level as well, Chuck, and I think that that's a good target to reach for right here. If we do see price continue to break down here, you can see how they respected the highs here. We came very close to it, did take it, and now we're back below the lows again. If we shift underneath this structure, let's say we invert this imbalance, right, then that's a pretty reasonable target to reach for. Yeah, all of the volatility looks like happened pre-New York. Now we're just dealing with the aftermath chop. So what we can do is, like, because we're at all-time highs, we really don't have anything to reference, like I said, to the left, right? So again, I'm going to take this high, right? This is the previous all-time high, and I'm going to mark that right there. Notice how we're respecting that level right now. So if we get a trade through, close through here on one of these big time frames, 1 hour, right? Maybe even 15-minute, right? That's previous daily high, by the way. Then there's a good chance that we're going to run for these levels, right? All of this liquidity here. Like I said, this run up here, all these breakout traders above previous daily high, right? If we come back down to these levels here, are now trapped, and then their stops are sitting underneath all of these levels here. I mean, they happen all throughout the day, right? It's not just pre-New York. Sometimes it's after New York. Sometimes it's like, 3, 4 p.m. We get those 3, 4 p.m. moves, right? We've had those before as well. Like this after 10 o'clock, you can see here. Nothing really in Asia, London. Then over here, right? The volatility at 3 p.m., 4 p.m., right? 2 p.m. is also very high sometimes. This is New York volume, right? This is New York volume. Right, so majority of the moves still happen in that window, in the New York window that we're trading in, right? And that's always going to be the case. But there's still that off chance that we get that, 2, 3 o'clock volatility, continuation after, right? See here, there's like very little activity in London and then New York, big volume, and then after lunch, big volume, right? But the majority of moves are always going to be in that New York session for futures, because that's what it trades off of, right? Stock Open and New York Stock Exchange. So there's always going to be more volatility overall in those periods, right? Just go back and look historically, which is why we don't trade these times. But sometimes it could happen, right? Sometimes we get a big, pre-New York move, like today. But it's really going to be a one-off type of thing. It's really rare. And you might think that it happens more often than it does because you remember it more, right? It just sticks out in your mind more, so you like make it a point to remember it, but it doesn't happen as often as you think it does because all the volume is in New York session. That's where all the trading activity, that's where all the institutions trade, that's where all the activity is when the market's open. All right. I can see a lot of people getting chopped out today, taking bad trades and making bad decisions. So don't be one of those guys. I would say look for a clear break of this consolidation right now. I would be looking for either a sweep of this low or a sweep of that high, right? I don't want to be trading anything in between right now. Because while we might get some moves in between, I mean, it's possible, right? We might get a trending move in between, but it still could respect the high here, still could respect the low here, and we get a move back down, and you're just sitting in chop forever, right? Like, take, for example, this, right? All through New York right now, the range high and low of this entire New York range today is from 266, let's call it 270, to 130. Okay, how much is that? That's a 140-point range. That's nothing. That's absolutely nothing. That's garbage, right? So 30 points, 40 points in either direction, and you're back in, serious chop again off your entry, and you might not be, making any kind of improvement, any kind of headway, right? So I'm kind of relieved that we only took that, small loss, that 20-point loss, because as you can see, we would have, got a full stop out. Obviously, we could have entered here and took, gotten some of that back, well, most of that back, all of it back, right? But then we would have came back and gotten more chop. If we had waited for price to run out these highs, we wouldn't have got there. And then we had to sit through this, and now we're getting another, another chop. So moral of the story is that, try not to navigate these ranges. This is where a lot of people are going to lose accounts. This is where a lot of people are going to go into huge drawdowns. This is where a lot of people are going to chase bad trades, right? Use bad money to chase bad money, and then get yourself into deeper and deeper holes. So wait for a clean sweep of a bigger range, right? This low here, this high here. Look for our model entry confirmations, right? Follow the 5 steps. If you guys don't have the checklist, again, download the checklist in the comments, all right? Make sure you have your own copy and you can follow along. First thing is always looking for a higher time frame point of interest, then a liquidity sweep, right? Those two things have to happen first. So your higher time frame point of interest in this case is going to be any kind of 15-minute swing high or low, or imbalance or OB in these ranges, right? In this case here, it would be the sweep of these pre-market highs, or down here it would be a sweep of like this low into this imbalance or OB down here. Okay, I doubt seriously that we're going to get any kind of setup right now in this chop before 11. Yes, I only trade NAS futures because it's enough. I mean, the way we trade and how much we trade, and of course because we trade prop firms, right, and we trade funded accounts, I have many prop firm accounts that I stack together. So if I only make $100 or $200 on a trade, you got to multiply that by 25, right? So a $200 day, right, becomes a $5,000 day on prop firms accounts, on funded accounts. And if you don't have that many, it's the same thing, but you're still stacking leverage, right? Even if it's only 2 or 3 accounts, right? A $200 day or a $300 day becomes, double that or triple that. So the opportunity we have right now with prop firms is really, really good, right? And you can use that as leverage to make a lot more money without risking a whole lot of your own capital. And with futures, it's really the only way it's possible, because with CFD prop firms, they don't really let you stack that many together. And the rules are a little bit different, and they're also much more expensive. So futures prop firms, you can get, an account for $100 or less, but a CFD prop firm, you're looking at, 300 to 500, maybe even 1,000, depending on how much capital. How many pairs do I recommend for a beginner? Always one. I never recommend more than that because people try to trade way too many pairs at the same time, right? And all you really need is one. If you can master one pair, right? Understand that back and forth, really understand the moves. Then you can go on to adding more to your watch list, right? Once you can figure out one pair and trade that profitably, then you can add another one. But most people are looking to increase their load too quickly, right? Before they get wings, they want to fly. They haven't learned to crawl or walk yet, right? And they're trying to do too many things at once. So, and that's where, like I said, the leverage from the prop firms makes a lot more sense that way, because with the prop firms and you can stack multiple accounts together, right? It gives you a lot more opportunity to make more money with just one pair. If you're trading your own capital, then yeah, obviously it's going to be a challenge and you're not going to make as much because obviously you have to trade lower sizes and less capital. But that's where using the prop firm. So like, a prop firm account for, let's say you buy an account for $100, a 50K account. Now you got a 50K prop firm account, which you can leverage and make, $100, $200 a day. But if you tried to do that with your own capital with $100, now you're trying to flip the whole account, right? $100. Using all of your margin, right? All of your account, risking the whole full 100 to double it, right? Which is not a good strategy. So prop firms give you leverage, they give you more buying power, right? And they give you more the ability to make more with the same $100. All right, so look at that. We did get our retracement there, right? Discount level here didn't get swept, but this one, like I said, right, I marked that as the level I wanted to see get swept, and we did see it get swept right here. That would have been a good entry with the versions as well. I was kind of talking through that, but I just finished telling you guys not to trade the chop, but the setup did happen while I was talking. So, all right, about a 40-point stop right underneath the cycle level here and previous daily high. Not too bad. Right, obviously it's over and done with here, so there will be another setup. Don't worry, right? And if it doesn't happen, it doesn't happen this week. We'll just come back next week and look for it. But there could be an afternoon setup, like I said, sweep out this high, sweep out this low. Look for a major, range to be swept out. All right, don't try to trade through this chop here. Yep, setting one pair, you can, it's also, keeping your focus as well, right? If you're trying to look at 3, 4, 5, 6, 7, 10 different pairs, I know some people that have like 30 pairs on their watch list. It's like, how do you even focus, right? Because, like, think of it this way. Do you want to trade one pair really well, or do you want to trade like 10 pairs like mediocre or like, not as well? And so you take like, 5 or 10 losses in a day, right? Because you're not really paying attention. You're not really, focused on what it's doing. You're just kind of taking whatever looks good, right, at the moment. That's probably one of the worst things you can do. Is just like take a trade because it looks good. You haven't done a proper analysis on it. You haven't done your, you haven't marked out your plan on it, and you're just basically trading on feeling. Granted, you could, sit there and do a pre-market plan for 10 pairs, 10 pairs the previous night. But, it's just so much work to do that. And then you're not even guaranteed a setup, right? So you do all that work for nothing, and then you may not even get a trade, or you get into a trade and, it doesn't work out that well. And now you got like 5 or 6 different, setups that don't work well, and you've got like a bigger loss, right? It's also about mitigating and controlling your capital and your risk. Because that's really what trading is. The only reason you would ever lose money or blow accounts or not end up in the green at the end of the week is because of risk management, over trading. It's always one of those things, right? FOMO, over trading, risk management, getting into trades that you should not be getting into. The most profitable traders are the ones that know when to stop, right? And know when to not enter trades. And so they're mitigating their risk better than you are. They're taking less losses than you would, and over time, that's what keeps you in the game. It's not how much money you make, it's how much money you don't lose. So if you can keep that under control, you're always in the game. You always have something to fight for the next day. But if you blow your capital, if you lose all your accounts, then what are you doing? You have nothing left, right? No skin in the game. How are you going to make money if you don't have money in the game? You got to preserve that capital, right? You got to make sure your risk management is top notch. That's the only way you're ever going to survive as a trader. It's great to have flash in the pan wins every now and then, big wins every now and then, but those are few and far between. And that's not something that anyone can really, keep up consistently. But $100, $200, small consistent wins, you could do that, right? But most people don't because of what I'm saying, right? Because they either want to try to go for the big win, they try to, push the limit. They trade when they shouldn't, they take setups when they shouldn't, right? They don't follow their rules. They overtrade. They miss the setup, so they just get into another setup because they missed their last setup and they don't want to wait for another one, right? All that stuff. All of that is what leads to, you basically losing accounts. All right, here's the breakthrough of the range, right? So we can watch this level here, see if we get a close back inside. Change of character to confirm. Technically, there's a swing right here, but I don't know if I would use that. Let's see if the 30-second gives us a better one. Well, there's divergence there, so I guess you could use that, but in any case, I'd want to see a change of character, right? For me right now, I'd say this would be the change of character for me. Okay, so we have a sweep of the high, change of character, retest of the range in the premium, right? So we need to retest the order block. Hopefully we get some sort of swing high here. We can sweep to get into that, and then we get a move down. That's what Forex is, or that's what trading is, not Forex. I'm trading, right? And it's a learning process that never ends. Right? You could trade for 10, 20, 30, 40, 50 years, whatever, right? You're always going to be learning something new. There's always something to learn. You can't have the attitude that, you've learned everything that's possible. There's always something to learn. There's always something that you can do better. And there's always something that people are struggling to do better that, maybe they can't. So it's normal. It's natural. Some things you have to learn through experience. There's nothing you can learn from a video or from, watching someone do something. You can pick up tips, you can pick up pointers, you can pick up things that you can apply, to your own style, your own trading, but a lot of the stuff is what you have to do on your own, your own implementation that that you absorb and learn yourself. Because if you don't actually do it, it's like watching videos on swimming, right? If you don't actually get in the pool and swim, you're never gonna learn how to swim. You're just watching videos on swimming, pretending you're swimming in the air. But unless you get in the pool, how are you gonna know what swimming's like, right? How are you going to learn how to hold your breath, tread water, swim across the pool? You can't do any of that sitting in your chair. All right, sweep, no change of character. Another retest of the level. So if this level gets broken through, right, we get a closure through, we'll look for another retest just like here, right? And there's a condition that we can look for a buy after that if we get a retest level, kind of like we saw here. Right, and now we have 15-minute confirmation because we have that consolidation broken through as well, and then we can look for that push up to the previous day high here and all-time highs, new all-time highs. Or at least this high right here, maybe. Okay, so yeah, about 10 minutes left. I think we're just going to call it here. We'll see what sets up for us afterwards, whether this is the reversal that sets up or whether it's the continuation and the retest that sets up. We'll look for either of those in the afternoon. It's Friday, guys, so you know, don't push your luck. If you don't need to, you don't need to force anything. All right, tomorrow we have our Saturday session for our VIPs, and that's it, guys. If you have any questions, go ahead and leave them below. Any last minute questions from anyone on the stream or on in the Discord, let me know. Okay. All right, guys. Well, not a great session, but only a small loss. It's okay. We'll come back and do it again next week. Any other questions, let me know. But yeah, that's going to do it for today, guys. Enjoy the rest of your day. Good luck with your trades. We'll see you on the next one.